I'm fine as well. Okay, so today we are just going to start one past paper. That's latest one. Okay, so let's do that. This is paper one, variant two, multiple choice question.
Which paper is
Okay,
this?
so first question. I have sent it to you already. This is October November 2025 paper.
Okay.
Yeah. So here the first question is that what is not an example of the bookkeeping entry? So first of all, the A option is that an entry made in the bank column of the cash book for a check received. Okay, so we know that this is a bookkeeping entry because cash book maintaining cash book is a bookkeeper function. So that's why this is not the right option. They are saying that what is not an example of bookkeeping entry. B is that any goods returned by a customer entered in the sale return journal. Again, this is the bookkeeping because here we have to make the books of original entry means prime books. It's again not the part of it. Cost of goods sold, cost of goods purchased and credit into the suppliers account. Okay. So it's also this is the like here we need to make the suppliers the payable accounts. That's why it's again not the part of bookkeeping. This is the part of bookkeeping. Sorry. Then again, it's not the right answer. Expenses paid during the year entered in the income statement. Yeah, that's right because that's not the bookkeeping.
Okay.
Is a part. That's why the D option is the right option. Then we have next question that what are the liabilities? So it's too easy. Amounts that are owed to or owned by a business. So this basically mixes the assets with liability. That's not a pure liability. So that's why this is not the right option. Amounts that are owed to others for the resources provided. Yeah. So this is the correct definition of the liabilities, like the amount that are owed to others for the resources. Right option. The next one is the amounts that need to be written off. This refers to the bad debts or depreciation, but not related to the liabilities. Amounts that the owner owes to the business. This
Is
is
this October
capital.
number
Blind
or
credits,
May
not
June?
liability. Yeah.
Is it October number or May June? Because I also want to
Then
open
we
it.
have the next question that question number three.
Hello. Hello.
1 second, I think maybe my internet is. Yeah, you can hear me now?
Yes.
Yeah, what you were saying?
No, nothing. I was asking if it's like May June or October number.
Yeah, that's a proven one.
Okay.
Okay, so Sally maintains a full set of accounting records and she has entered the following transactions in her cash book. First is that A check for $200 was received from a credit supplier. Okay, so it affects the bank and customer means receivables. So customer is a personal account. It's not the nominal. So that's why this will not record in the nominal ledger. If you talk about the insurance premium of $200 was paid by check. So insurance, we know this is one of the expense and it is entered in the nominal ledger. Um, three is so two could be the right option. One is not.
Yeah.
Third is that petrol for the delivery van was paid in cash. So
Correct.
again, this is the expense, so that's why it will we will enter this into the nominal ledger. So third could be right option. Fourth is that total cash sales of $400 were received. So cash sales are not recorded in the sales account
They're
via
in the
the
cash
sales.
account.
Yeah, so that's why this will not enter in the nominal. So two and third, two, yeah, the option is the right option. Next question is that an account in the purchase ledger of X Limited has a debit balance. Okay, so what does this balance represent? So A is that an amount owed by X Limited. So this would be a credit balance, not a debit balance. So that's why this is not right. An amount paid to the X Limited. So supplier pay X Limited, not correct here. So that's why it's again not the right option. C is that a prepayment made by X Limited. It is correct. It could be correct, but see the D one as well. Total purchase made by X Limited. So this is not what alleged balances shows. So that's why C option is the right option.
Okay.
Then we have the next question that okay, yeah, this is what where you can read and tell me the answer for that. There's a Paul account, and as you can see that the following account appeared in the books of Mary. So basically, if the balance is coming on the debit side, so it means that the Paul is basically the customer of Mary.
Okay. So she's a trade receivable.
Yeah. This is the sales ledger.
I think A is correct.
Okay. Uh, on 1st April, Paul owed Mary 90. Okay, so yes, he actually owed. So that's correct. On 14th April, okay, Paul sold goods for 150. No, Mary sold goods for 150 to Paul, not the Paul.
Yeah.
Not correct. 21st April, Mary returned goods for 25 to Paul. $25 on 21st April. Okay. So C part is also not correct because return on 21st April are on the credit side, meaning that Paul returned goods to Mary, not the other way around. So yeah. So most likely the A option is the right one. If you see the last one, the D one, so it shows that on 30th April, Mary owed Paul 125. But if you see the closing balance CD, so it is a debit balance. It will come here. So Paul owes Mary, not Mary owing Paul. So that's why A option is the right option.
Okay.
Sixth one is that a supplier has received a debit note from the customer. Okay. What does a supplier use a debit note for? So debit note is sent by a customer when goods are returned. So for the supplier, this represents the sales return. So sales return are recorded in the sales return journal. So let's see, A is statement of account. So it is not correct because it does not record the returns. So that's why this is not the right option. B is to correct the sales journal. Yeah, this is right. As I told you, I have explained that why it is correct. C is to make an entry in the sales return journal. So one second. B is not correct. Sales journal is for credit sales, not for the return. Sorry, this is not correct.
Yeah.
C is to make an entry in the sales return journal. So yeah, this could be right because the debit note we will be using for this purpose. To prepare a credit note, so credit note is issued, it is not prepared from a debit note, so that's why this is again not the right option. So C is the right option basically.
Okay.
Then we have question number 7. Yeah, can you just solve this? Read it and then solve it. Sue allows
Sure.
2% cash discount. Yeah.
Sue allows 2% cash discount to credit customer who settled their account within 28 days. Jane purchased goods for 200 from Sue on 10 September, but
Hmm.
returned the goods to Sue on 15 September. Okay. Which entry did Sue make for transactions 15 September? 15.
So Jane basically returned the goods. Return the goods. This is a sales return for Sue, of course. So returns are recorded at the original invoice value, not after discount. So discount only we know that applies if the payment is made, which did not happen.
Yeah.
So most likely the D answer is correct then.
Yes, it's D.
A and B, A and B could, yeah, A and B is not correct because purchases return journal, it is used by the buyer, not by the sue. And C is also not correct because $196 includes discount. Discount does not apply on the returns. So that's why D option is the right
Wait,
option.
didn't she settle her account in 28 days?
20 what?
Didn't she settle her account within 28 days? So why isn't the cash discount applied? She did it before 28 days.
Yeah, so Sue allows a 2% cash discount 28 within 28 days. Okay. So yeah, so that's what I'm saying now that she I think purchased this on 10th September and she returned those goods in on 15th September. She did not pay anything because this discount allowed for the payment time. No?
I didn't get it because why
One
wasn't the
second.
cash discount
They
allowed?
are they are saying that Sue allows 2% cash discount to credit customer who settle their account within 28 days. Jane purchased goods for 200 from Sue on 10 September, but returned these goods to Sue on 15 September. So, which entry did Sue make for the transaction on 15 September? So, of course, this is the we will write this in the sale return journal no? Because as you can see that she purchased the goods for $200, but she discount allowed you will receive when you will pay this. When you will pay
So
the
on
amount
10
only
September she
that.
did not pay it,
No, as you can see, she did not pay. She just returned the goods.
but she returned like 5 days later.
Even after 5 days later, but not with the 28 days. Now, basically, the cash discount you will receive whenever you will pay the amount. It's not like if you're returning something, so you will get the discount at that time. Cash discount you will receive whenever you are paying something. She did not pay anything. She just returned the goods. So, of course, she will record in the sale return journal. Of course, Sue will make the entry in the sale return journal. Now, why she will make $196 entry? Because she did not pay. There are two types of discount: trade discount and cash discount. Cash discount you receive at the time when you pay.
But then they should have mentioned it's on credit, but they did not mention it's on credit.
Credit means what does it mean?
That they bought the goods on credit and not purchased it, like did not pay cash. But here credit is not
No,
mentioned.
even if they are even if they are not saying this thing, because as you can see that they already told us that to the credit customers, okay, and as you can see that after telling us that the credit customers pay if they will pay within 28 days, so then they will get the cash discount. But the thing is that the jail is not paying anything, she just returned the goods. So if she just return the goods, so of course we will make the sale return journal, we will make this entry in the sale return journal no?
Okay.
Why we should apply the cash discount? If she did not pay anything, she simply just purchased the goods on 10th September and then she just you can say that return the goods. Simple. There is no cash discount will not apply. Why it will apply of course because she did not pay anything. If she is not paying anything, so we will not apply the cash discount.
Okay.
Trade discount you will receive whenever you are purchasing something in bulk and it will apply before the payment and it will apply before the transaction. Trade discount will apply before the transactions. And you will never record a trade discount anywhere. Cash discount you will receive whenever you are paying something. If you are returning something, you will not get any discount for that.
Okay.
Okay. Then we have the next question 8. Okay. Yeah, can you please read it and tell me the right answer for that?
A trader prepared the trial balance which showed the debit column total of 45,000 and the credit column total of 40,000. The following errors were then discovered. The discount received account balance of 500 was listed in the debit column of the trial balance. Discount received.
Okay, let's discuss about it. So as you can see, the discount received account balance of $500 was listed in the debit column of the trial balance. So it is like wrongly listed in the debit column.
Yeah, it
Discount
should be
received
on the
income, so
credit.
it belongs to yeah, it belongs to credit. So if we will correct it, so it means that it will of course decrease the debit side and it will increase the credit side. So it means that the debit side will be, let me write it here. So debit side will be on debit side is a 45,000. So you will be deducting 500 from here. So there will be 45,500 on the debit side. And when you will be adding, because as you can see, they are saying that the credit column is 40,000. So if you will add
Yeah.
this 40,000, 500 here, so this will become 40,500. So as you can see that they are saying what are what were the trial balance total after the correction of errors. All errors were corrected and the trial balance totals agreed. But this is not the right answer in that case.
Yeah.
So let's see the other one.
The returns
Returns.
outwards account balance of 250 was omitted from the trial balance.
Yeah. So return outwards account balance of 250 was omitted from the trial balance. So in that case, returns outward 250 was omitted. So we know that return outwards is the credit balance. So it
Yeah.
means that your credit side will increase with 250. So 40,000 plus 500 is on the debit side. No, it was how much it was credit side. Sorry,
Credit side, yeah.
let me just remove it. Okay, so 40,500 plus 250. So this is equal to 40,750. 40,750. Okay, let's talk about the next error. Error 3.
The debit column of the trial balance was overcast by 3,750. We need to decrease
Yeah,
the
so
debit
then,
side. So credit
yeah,
will increase.
yes, yes. So then the debit column of the trial balance was overcast 3750. Yeah, what we will do in that case?
We will decrease the debit.
Yeah, can you please tell me that how we can do that? Like, can you
Um,
just
4 5.
write something on there?
No, there is no option of writing.
No, there is no option of writing.
Let me see tools. No, there is no option.
Okay, let's see. Okay, let's see. Okay, I'm just going to write it down. So error 3, the
There is
debit column of
option
the
of
trial
writing in
balance.
Zoom. Like we can write on
Yeah,
Zoom.
yeah, yeah, yeah. On Zoom, I think. The debit column of the trial balance was overcast by 3750. So debit column was overcast by 3750. So it means that the debit total is too high. So we have to reduce it. So it means
Yeah,
that the debit side we will reduce with the
50.
3750. So new debit total will be 44,000 like this one, 44,500 minus 3750. What is the answer?
One second.
37 3750 44,500 minus 3750.
That is 40750.
Yeah, this is the right option then.
Yeah. Option B.
Next question is that Ahmed's trial balance did not agree and he entered a difference in the suspense account. Following errors were later discovered. So we have these three errors. We need to see that what was the original balance on the Ahmed suspense account. Okay, how we can do that?
A payment of 200 for a vehicle repair had been debited to the motor vehicle account.
Yeah. So the payment of 200 for a vehicle repair debit to the motor vehicle account. So cash was credited correctly here, but wrong debit account. But still
Yeah.
a debit, so does not affect the trial balance totals. So that's why it will ignore for the suspense account. If you see the error too, that drawings of $150 correctly recorded in the cash book but had not been posted to the drawings account.
That
So
affects
here
the
the cash
suspense.
book, yeah, so cash book has been credited here, but the drawings debit missing.
Yeah.
So it means that the credit exceeds the debits by $150. So it means that suspense account must have $150 on the debit side.
Yes.
One second, let me write. Okay. Then error three is that the sales journal had been undercast by 900. So sales account always credit. So if it is understated, so it means that again debits exceed credits by 900. So then again the suspense account must have 900 on the credit side.
Yes.
So if maybe we want to find it out, so you just simply minus, this is the heavy side, 900 minus 150. So 750 will be the
750.
answer. Yeah, 900
Yeah.
minus 750. Yeah. So debits are greater than the credits. So the suspense account had a credit balance of 750. Yeah.
So B is correct.
Yes. Yeah. Next, this. Okay. Now you need to explain it and solve this.
Okay.
Question number two.
Susan is a trader. She received a check from Zahir, a
Hmm.
credit customer, for 300. This check was incorrectly debited to Zahir account and credited the bank account. What journal entry could correct this error? It was credited to the bank account. We need to debit the bank account by 600,
Hmm.
and Zahir needs to be credited by 600. So B is the correct option.
Next question is the trial balance is not agreed and suspense account is open. Which statement is not correct? Okay. A is that error of commission and error of original entry are entered in the suspense account. Okay, so this is not
No,
correct
it's not
because
correct.
this will not affect the trial balance. B is that a trial balance difference is entered in the suspense account. So
Yes,
yeah, this could be right.
correct.
The suspense account remains open until all errors preventing the agreement or trial balance have been corrected. So C is also right. D is because they're saying no, does not like which
Yeah,
statement
it
is
is
not
not.
correct.
It's not correct.
So D is that when all the errors found have been corrected, then there will be no. Yeah, that's also correct. So A is the right option.
Yes.
After receiving her bank statement, uh, line updated her cash book. Which items could reduce the overdrawn balance in the cash book? First of all, bank interest received, yes, money comes in, so yeah, this can reduce the overdrawn balance. Credit transfer receive, again, money comes in, so it can also reduce the overdrawn balance. Debit payment, of course, it will not because like the money will go out because of that. So one and two is the right answer.
Okay.
Understood, no? This one. You
Yes, I
understood?
understand.
Okay. Now the question number 13 is that Natalia, whatever it is. Natalia. Okay. So Natalia is a both customer of and a supplier of the Gustav. And on 20th June 2000, 20th June, Gustav's account is in Natalia's purchase ledger had a credit balance of 295, and his account in Natalia's sale ledger had a debit balance of 140. So Gustav wishes to offset one amount against another. This is like the contra entry. Which entry will the Gustav make in his control account? So basically, Natalia is both a supplier to the Gustav. So it means that the purchaser should be having a credit balance of the 295, which is already described here. But Gustav wants to offset a smaller balance against the ledger. So amount that can be offset, that is $140 in that case. So debit here, what will happen? We will be debit the purchaser account control account with 140. So this will be reducing the amount he owes, and we will carry the sales ledger control account with 140. So this will be reducing amount owed to him. So A is the basically correct option.
Okay.
Next one is that 14th. Yeah, read it and solve this.
Johnny prepared his sales ledger control account. The figures in it came from several different sources. Which statement are correct? The source of opening balance was the sales account. The discount allowed was totaled in the three-column cash book. Discount allowed. Yeah, second is correct. The irrecoverable debts were posted from the general journal. Two and three. Two and three are
Yes,
correct.
2 and 3. Yes. Okay. Then we have question number 15. They are saying that. Okay. So they are saying that at the beginning of the year, first January, Zach paid $420 for an equipment repair, and he entered his amount in the equipment account. At the end of year on 31st December, means after 1 year, depreciation of 20% per annum was charged on the balance of the equipment account. Means that, of course, when he entered the $400, so we automatically charge a 20% discount on that too. Sorry, depreciation on that too, using the straight line method. What was the overall effect on the book value of the equipment on 31st December? Okay. So basically, what happened here, that the repair cost, which is $420, was wrongly added to the equipment account. So repair should be an expense, not it should not be capitalized. So side effect, the effect before depreciation is basically that we overstated the equipment overstated with $420. Okay, so depreciation, of course, it's also wrongly charged on repair amount. So what will be the 20% of 420?
84.
$84. So depreciation is overcharged as well with $84. So it is reducing the book value by $84. So it means that the overstatement was for 420, and the depreciation we charge, so this is 84 because we already deducted. So it means that overall your asset is, you can say that overstated with the how much? 420 minus 84?
336.
336. Yeah. So yeah, it is overstated with 363 because we already charged this 74 now, so it already reduces the
Yeah.
value. So that's why the difference is 330. Okay.
Okay.
Then we have question 16. Yeah, read it and try to solve this.
Okay. Why does a business need to provide for depreciation in its accounting records? To ensure availability of funds to replace its non-current assets. No. To ensure that its current asset value is not overstated. To record as an expense the amount of the non-current assets used up during the year. C is correct. To show its non-current assets at their market value.
Yeah, C is correct.
C.
An asset originally costing 20 had been depreciated by this, was sold for this, which entry will be shown in the disposal account to record the amount to be transferred to the income statement. Okay, so original cost is 20,000. Let's first of all find out its book value. That is 20,000 minus its total depreciation, which is 15,000. So this is
5,000.
5,000. But the sale proceed is 3,000 only, so there's a loss on disposal. So it means that loss is transferred to income statement as a debit balance. So it means the correct answer is B, $2,000 debit.
Wait. Okay.
Because there's a loss on disposal, no?
Oh, okay, okay.
Income statement will be debit with the loss. Yeah. Question number 18. Why should prepaid income be shown in the financial statement of a business? So prepaid income is basically relates to the future period. So it must be excluded from the current income to apply the matching and accrual concept. So A option is that so that the credit customers pay the correct amount. So it has nothing to do with the customers paying. So that's why this is not correct. B is that so that payments to credit suppliers are correctly recorded. Again, it's not about the suppliers. Then C is that prepaid the so that the statement of financial position shows the correct current assets. So prepaid income is a liability, it is not the current asset. D so that the total income is matched against the total cost of the same period. Yeah, that's correct. Question number 19. Yes, read it.
Okay. What is the effect of total assets and on equity in a statement of financial position if the value of closing inventory is overstated? Overstated. Total assets closing inventory overstated. Oh no, A is not correct. Overstated.
Yes.
A is not correct.
One second.
Total assets
Which
equity.
entry will be shown in the disposal account to record the amount to be transferred? They're asking about a disposal account. So if maybe you know that whenever there is a loss on disposal, so income statement will be debit and
Wait,
disposal account
aren't we didn't go on
disposal
19?
account will be correct. Yes. No, no. Actually, I just saw that. I just saw this line again, so that's why I'm just correcting it. They're
Oh,
asking
okay.
that which entry will be shown in the disposal account. Disposal account. They're talking about a disposal account, not the income statement. Which entry will be shown in the disposal account to record the amount to be transferred to the income statement. So in the disposal account, the entry will be carried. Why? Because as you can see, the double entry disposal account. Whenever there's a loss, as you can see, it's a clear loss. So if there's any loss, so income statement will be debited and the disposal account will be carried. So it means that on the carried side, we will write it like this.
Okay.
This is loss. So this is right, not this. Okay. Yeah, so you were, I think, reading this one.
Yeah. What is the effect on total assets and on equity in a statement of financial position if the value of closing inventory is overstated?
Yeah.
Total assets overstated, equity overstated.
Uh, what you said, what is the right answer? This one, B, A?
I don't think A is the correct answer. Like, how can
Okay, you
assets
are
be
asking to me.
overstated?
Okay, okay,
Yeah.
one second. Let me read this. What is the effect on total assets and on equity in the statement of financial position if the value of the closing inventory? Okay, so basically, the closing inventory, we know that we used to write this closing inventory under the current assets, in the statement of financial position. So now what will happen if the closing inventory overstated? So it means that your cost of sales will be understated, first of all, in the income statement. Then profit will be overstated.
Yeah, okay.
So if the profit will be overstated, so it means that the equity will be overstated. And similarly, it means that your total assets will be overstated as well because you're writing the value of the closing inventory under the current assets more than its actual value. So that's why the both things will be overstated, asset and equity both.
Okay. Who works in a
Now
service
read this
business?
one.
A hairdresser, an estate agent, a car mechanic, service business, a car salesperson, service business. One is correct, an estate agent. Two is correct, a car mechanic. Three is correct, a car salesperson. I feel
No,
like
I'm
four
just
is also
clicking
correct.
like I no, I am just just like that I'm clicking it. So basically, hairdresser, of course, he provides the service. Estate agent, he also provides the service. Car mechanic, he also provides the service. But the car
Yeah.
salesperson, he sell goods, not the service.
Oh, okay.
So this one is right. Okay, now we have the next question that commission at the beginning of the year on 1st January, Kate was owed $1,500 commissions by clients. During the year, Kate received $18,000 commission. At the end of the year, on 31st December, Keith was owed $800 commission by clients. How much commission did Keith record in his income statement for the year end? Okay, so it is like you can maybe make the income account here, and you can do one more thing. If you will make income account here, so it will be like lengthy. Okay, so as you can see in the income account, we will use a mnemonic APPA APA. So at the beginning of year 1st January, Keith was owed $1,500 commission by clients. So what does it mean? Where I will write this? Here or here? Prepaid or accrued?
During the year, Keith received 8,000 commission.
No, no. I'm saying I'm talking about this
Oh,
one.
okay. Sorry. Income. I didn't know Keith was over 50 accrual.
Keith was owed $1,500 commission by clients. Should this accrued income or prepaid income?
He was over 15,000.
1500,
Oh,
1500.
sorry.
I'm saying
$1,500.
is this accrued income or prepaid income for Keith?
It's
Prepaid
accrual.
means that you received in advance. Accrued means that you provided a service but you did not receive the money yet.
So it's accrual.
Okay, it is accrued. Let me write it here then. This is what you received. So when you receive, so it means that the bank has increased and the cash income increased. So here we will write the 18,000.
Mm, yeah.
Then at the year end 31st December, Keith was owed $800
Accrual again.
commission by clients. How much? Yeah, 800. So 800 is closing accruals. Okay. So that is 800. Okay. Now cash received plus closing accruals minus opening accruals. So you will
I
get the
It
amount for
is
the income statement.
17,300 B.
Sam, okay. Yeah, read this one now.
Okay. Jack and Jill are setting up in business as partners and are considering writing up a partnership agreement. What is not included in any partnership agreement drawn by them? The rate of interest to be charged on drawing, it is included. The rate of interest to be paid on loans from partner, the rate of interest to be paid on a loan. It is included. A rate of interest to be paid on a loan received from the bank. The rate of interest to be paid by the capital invested by each. Answer is C. The rate of interest to be paid on a loan received from the bank. That's not included.
Okay. Now read this one as well.
Right. Raj and Rohit are in partnership sharing profits and losses in the ratio 2-1. Raj is entitled to an annual salary of 3,000. The profit of the year was this much, 14,100 for the year ending 31 December 2024. On 1st January 2024, Raj's current account had a debit balance of 1,800. What was the credit balance on Raj's current account on 1st January 2025? Okay, let me try.
Yeah, you can solve it. Should I do this or you can do that?
Can you do it?
Okay, because you are taking time, so that's why. Okay, so basically, what we need to do, we need to find out the credit balance of the Raj current account on 1st January 2025. So first of all, we need to calculate his share of profit, and we will add any entitlement while, like while adjusting for the opening balance. Okay. So first of all, we have to calculate the residual profit. So residual profit is a profit we know that which remaining after the Raj salary is deducted from the total profit. So the total profit, as you can see, that this is 14,100. This is the profit.
And we minus
And the annual
3,000.
salary was 3,000. Yeah, so we will deduct the 3,000.
It
This is
is
11,000, 11,100.
11,100. Yeah.
Now we need to calculate the Raj share. So Raj share is 2 over 3. Okay.
It is 7,400.
Okay, 7,400. This is the Raj
Yeah, Raj.
profit. Okay. So closing balance on 31st December, which of course becomes the opening balance on 1st January 2025. Um, like if you see, like the opening balance is the debit balance, which is 1,800. Of course, this is the minus balance because it is coming on the debit side. Because we know the current account is having the credit nature. Whenever it increase, it will credit. Whenever it decrease, it will debit. So if the Raj current account is 1,800 debit balance, so it is a negative balance. Negative balance.
Okay.
So opening balance, of course, this is the minus 1,800. Okay, of course, we will add the salary here. Salary was 3,000. We are making the current account basically.
Okay.
And the we will add the profit as well, which is 7,400. So what will be the closing balance then?
I'm getting 12200.
12200. 1 second. Uh, entitled on salary and 1,800. Let me just calculate from my side. That was 1,800. Okay. So this is 1,800 and okay. This is basically okay. That's 1,800.
Oh wait, I forgot to put the minus on the 1800. I'm
Yeah,
getting
minus
8,600.
yeah, 1,200 plus. Yeah, I am getting
Yeah,
1,200 by fine plus 7,400. This is equal to 8,600.
600. Yeah.
8,600 carat balance because at the end we got the positive balance. That's why this will be the carat balance. Yeah. Now the next question is that BDC Limited provide the following information. We have the ordinary shares, retained earnings, and we have the debentures. Okay. So, hmm, how much was the equity and capital employed for the BCD Limited? Okay. Hmm, equity. Okay, first of all, the ordinary shares are 300,000, retail earning is this, debentures is this. So just to find out the equity, what we will do, it's easy. We will add the ordinary share capital, ordinary shares, or we will add the retained earnings, not the debentures. So how much this will be? Okay, this is
500,000.
this will be 500,000. Yeah, this will be $500,000. And then what we need to do, we need to find out the capital employed. So equity plus long-term liabilities means debentures. So this will be 6,70,000.
So we're
So
adding all of it.
that the equity is five. Yeah, because capital employed is equal to equity plus liability, no?
Okay.
Non-current liability. Yeah. So D is the right option.
Okay.
Then we have question number 25 that which statement correctly describes the called up share capital? All share capital which has been issued to shareholders, so that's issued share capital, not called up. Shares which have been issued and those not yet issued. So it is incorrect definition of this. The share capital for which payment has been requested. Yeah, that's correct. This is called called up capital. The value of shares for which payment has been received. This is the paid up share capital, not the called up. Then we have question number 26. Okay. So, Sports Club was established on the 1st January. It has a clubhouse and also run a snack bar for its members. Which item would be included in the receipt and payment account for the first year ended 31st December? Okay, first is the new furniture. New furniture to be used in the clubhouse paid by credit transfer. So of course this will include it because it is paid by the cash. Because the receipt and payment account includes only actual cash received and paid regardless of period. So that's correct. Subscription paid in advance by club members in advance for the next financial year. This is also included in the cash and like the serial payment account because this is a kind of cash book for us. Subscription owing by club members at the end of the financial year. This will be excluded because here we did not receive any amount. Snack bar which is owing at the end of the yeah, this is again excluded. It's not all also recorded on the receipt and payment account because we did not receive anything or not paid anything. So one and two is the right answer.
Okay.
Then we have the next question that a sports club started. Okay, a sports club started running a cafe selling hot and cold drinks and confectionery on 1st January 24. Following information is given for the year ended 31st December 24. Sales is this, purchases, wages paid to cafe assistant, and this is the closing inventory. What is the profit on the cafe? Okay, first
Let
of
me.
all, we need to find out the cost of sales. So this is purchase, this is minus closing inventory. 17,000, 1750, sorry, minus 250. So cost of sales will be equal to 1500. Next, we need to find out when we will deduct the sales, this cost of sales from the sales. So what is the answer for that?
Okay, one second.
3200 minus 1500.
Say 1,700.
Now minus these wages.
Okay. 500.
Expense. So we will get the net profit.
12007. C.
Okay. Uh, then we have next question. We needs to manufacturing business provide the following information. We need to what was the factory cost of production transfer to the income statement? Okay, transfer to the income statement. Prime cost we will add, factory overheads we will add, opening work add, closing work minus. So what is the
Okay.
answer? Add, add.
326 plus 48. I'm getting 280,000.
Next question is that Gem has been in business for many years. On 1st March, Gem purchased a new factory. On that date, he paid 3 months insurance on his factory, which is totaling 900. What should Gem enter for insurance in this table of financial position on 31st March? Okay, so basically, $900 covering the 3 months. So what will be the monthly cost? Monthly cost will be 300. But the insurance used in the March only. So it means that the April and May remaining. So for the April and May, this is $600. Because if you see like $900 for a 3 months, so it means that for the 2 months there is 200, sorry, per month payment.
Yeah.
So it means that the prepaid expenses like the $600 will be the part of prepaid, the part of current assets because we have paid in advance.
Okay.
Let me just. This is really easy. This is like you just used to find out the like you can say that this is the PLCA.
Yeah.
This is really easy. You can do that.
I can
And
do it.
yeah, next question is about asset of a business increased by okay. Asset increased by 2,800. No, increased by 2200 to 22,000 and its liability increased by this over a one period. During this period, the owner invested an additional capital of this private funds into the business and withdraw seven. Okay, so this is like very easy opening capital. Like here, what you have to do. Uh, where is the okay? So I think you know that how we can find it out. So basically, first of all, we will find out the change in capital. As you can see that the asset has increased by 22,000 and liability decreased by 6,000. So you can find out the change between this. So it means that your capital has increased with 28,000 altogether. Because if the
Mhm.
asset has increased with the 22,000 and liabilities has decreased with the 6,000, so if you just find out the capital is equal to assets minus liability. So if the liability has decreased by 6,000, asset has been increased by the 222,000. So we will add these two. So the change in the capital is basically 28,000.
Okay.
So yeah, so 28,000 will be a kind of closing capital. So we will be doing the reverse working. Usually we deduct the drawings, but now we will add it. And additional capital we used to add, now we will deduct it. So you will get the profit for the year.
That is 31,000.
Okay. Current ratio is easy, like you can find it out. Like current ratio formula, current asset divided by current liability.
Okay. I'll do
This
it.
is this is as this is asset, this is asset, this is asset, this is liability, asset, liability. Then we have question number 33. So they are saying that JAWS runs a business providing accounting and bookkeeping services. What is not relevant to analyzing his balance business financial statement?
C is the answer.
Current ratio, it is relevant to liquidity. Uh, Profit
C is the
margin, it is
answer.
relevant to profitability. Okay, C is the answer. This one is that first of all, one second, let me just send the link to another student.
Okay.
Okay. Jamila's business sells one type of product only. She provides the following information. Okay, number of units sold in year one, this is this, this is this. Sales revenue is different, rate of inventory turnover is different. What happened in the year two? Okay. So basically, as you can see that the sales price per unit in year one, that was $1,000. Sorry, 1,000 number of units sold, and the revenue was 8,000. Okay, we can solve this 34 and 35 in the next class. If maybe you can solve this, so it's good because the student is just
Like,
she's just wants to join. Yeah. So maybe if you can do these two questions, you can do that. If not, so I'll let you know on the
okay,
WhatsApp.
I'll try to it.
Okay.
I have this.
Love is. Yeah.